Hey, welcome back. So it's a really interesting time in the market with the S&P essentially being sideways, not quite sure which way it wants to go. So I thought you might like to know how to find stocks to trade when the broad market is sideways, as I just went through this entire process with my traders in my swing trading lab. Today's Tuesday, February 8th, 2022. Now, important reminder before we look at the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in my video. So I'm going to bring you over to my chart of the SPY here. All right, so you can see that I have my TradeStation screen open with the SPY on a weekly chart. Now, you may not be used to looking at a weekly chart, but it's just like any other time frame, daily, 60-minute, etc. And each one of these price bars is representing an entire week of price action. So it's important to note that the current weekly bar is only 2 days old because today's a Tuesday, right? Now, I want you to see this arrow that I drew here, okay? That exact pinpointed tip on that arrow is where there was a forecast for the price to make a high, right? And that was in this rally off the low from the week ending January 28th. And you can see that was extremely useful. And I went through that with my students in the swing trading lab, showing them exactly how I calculated it. Now, there's another interesting point of resistance that the market's currently trading around. Again, specifically the SPY, which we're using as a proxy for the S&P 500. And that is this area of 45.50. Now, that's an approximation of a very close by precise level that is a key Gann level. So what this tells me is that not only did we reach the forecast for a high and stop, we are now going sideways. We are churning around this resistance level, but we are still within last week's range. And you can see here the RSI power zones are lifting up from the bull support power zone. So how do you trade stocks in an environment like this? Well, here's a few tips, and then I'm going to show you some examples pulling from my latest stock picks grid to keep you having an example that's relevant, something you can study and dive in on your own. So one aspect is to actually trade the ranges. So let me show you what I mean here. All right, now you can see the chart of ticker K, that's Kellogg. And here's a market that we analyzed from the sector down to the weekly chart, down to the daily chart, again, using my top-down approach. Now, what you can see here is that it is down near the lower end of a range that has been holding since October, right? Every time we came back towards that $60 area, it kept bouncing higher. So I showed my students how you can use that return to this support area to be on the lookout for a low-risk trade where you're trading the ranges. You're essentially trading the expectation that we will move from this edge of the range up higher again. Now, the initial upside target is 64.50. I explained why in full, but the key thing here is that when you trade the edges of a range, you can't just assume you're going to get back to the top of the range, okay? You're probably going to have barriers along the way. But you can absolutely trade ranges if you have the right tools under your tool belt and you know how to manage your risk, right? So that's one way to trade the market when it's going sideways, is find stocks that have nice, healthy size ranges and look to trade the edges of the range with low risk. Now, another way to take advantage of these market moves is to be really precise in your risk to reward. Now, you should already be doing that with trend trades, but if you have that really refined, you know how much you're risking for how much you want to make, then even if there's a limited move presenting itself in the market, you can look at how to dig into that. So let's look at an example. So here's the ticker of Costco, or here's the chart of the ticker Costco. And you can see here that it has had a healthy recovery off of the January 24th low, but now it's in a bit of a sideways range, and it's coiling around my triple moving average filter, the two shorter term moving averages. So what I think is likely to happen is that we're getting an upside break of this range. But the important thing, guys, is that when you have an upside break of a little tiny range, 3, 4, 5, maybe 10 daily bars, you can't make the trade with the expectation that the trade's just gonna like go to the moon, you know, make new highs and all that. You've got to analyze the resistance levels along the way. And again, I did that with students in the swing trading lab, and we came up with this 546 area as a really realistic area for Costco to trade up to that may then exert some bearish pressure and pause any run up. So that's when you can come back into your risk to reward ratios. Every unit of risk, you want to have at least 1.5, 2, 3 units of reward, right? And you can use that to determine how to best trade. All right. The last thing that's really important is knowing actually what not to trade. And in a situation like the one we're in now, where it looks like the market wants to creep higher, but it's not quite sure yet, it's really helpful to know what stocks to not go short anymore. So these end up in a category in my stock picks grid called persistent downtrend, meaning I think all the selling has kind of been shoved out of them and you should stay out of the way. So let's look at an example. All right, here we have the ticker CRL on a daily chart. And you can see here that while this is still in a downtrend, we did have a defensive signal on the RSI power zones. All of you out there with the Bull Bear RSI Facebook, you know exactly what this is. And you know even better if you've got the 4 zones RSI coverage system where I teach you more about it. And that warned you at the end of January to not stay short anymore and to get out of the way and stay out of the way of this market bounce. Now, this is where my triple moving average filter is extremely helpful. You can see that since November, that filter, and this is all detailed in the 4 zones RSI coverage system, that set of moving averages has been extremely helpful to stay out of the way when this market continues to roll over, all right? But one thing that you can see is that we are now on our way back to the longer term moving average that's in there. And so when you see price action like this, it's coiling up between the shorter term moving averages and the longer term. If it pushes lower, I don't see that much more room for it to go down, honestly, before it would have a more sizable recovery. So CRL is in my persistent downtrend category because it just doesn't have that much more room to the downside versus what I would like to see, again, from risk reward perspective. So I hope that gives you some ideas of how to best find stocks to trade when even the broad market's going sideways. Of course, there's absolutely no mandate to take any trade. You know, there's no money lost when you stay in the sidelines. The thing is, we don't know how long the sidelines are going to last, right? This could be very dependent on how inflation numbers come out over the next several weeks or months. This could be extremely dependent on what the Fed does in March, but that's weeks away. So if you have a trading business that you are looking for stocks to trade and take opportunities that present themselves in the market, you should still be looking at those. Just be more specific in what you're looking for. And again, really hone in on these 3 examples that I showed you. And that should provide you some opportunities that are still safe to trade and fit your risk reward plans, which again, I don't know. So that's why there's that warning that I'm just showing you some examples that work for myself and my swing trading lab members. Your results are up to you. With that, be sure to subscribe, like, follow, and comment. I've been loving seeing your comments, sharing your thoughts on my analysis and more of what you want to see going forward, and I'll catch you on the inside. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.